Welcome to the full course on market structure. This video is going to give you everything you need to know about market structure. By the end of this video, you'll be able to draw your market structure in a very systematic way, in a mechanical way that you can actually go ahead and automate it if you have an algorithm. So the reason why I'm making instance of this is because I'm going to give you guys a very systematic way and not something that is up for interpretation. I'm going to give you guys the way that I usually use and mark my market structure. Now, for you to read market structure effectively, you must work with at least three time frame. Which must work with three time frame. One, your higher time frame. Two, your intermediate time frame. Three, your lower time frame. Now, the structure you are going to be reading, the market structure you're going to be reading will be in your intermediate time frame. Your higher time frame is to look for any key level that is being hit, that has been hit or about to get hit to anticipate your structure shift. Now, your intermediate time frame is where you're going to be reading your structure. Your lower time frame is in case for confirmation entries. I'm going to give you guys. So let's now talk about how to map out this your market structure. And this is a very easy schematic diagram, but in most cases you're not going to see it like this. And don't worry, I'm going to give you guys a live example of how this actually play out so you can get conversant with it. And the goal of this thing is that the more you draw your structure, the better you get at it. Now, one of the major things you want to consider is while doing this thing, you want to always use this tool. This is the tool I use, the price range. This tool is like this, or you can use your Fibonacci tool. But I like to use this price range. So when price makes an expansion, what you want to do is to come and take this your price range tool and mark from the low. You really want to mark it out. It's key you mark it out to the high. And at this point, price is going to be doing whatever it wants to do. It might be retracing, doing like this, doing like this, doing like this. If it breaks it and continue downwards and start doing like this, all you have to do is to just draw it higher again. And then it's going to, at some point, it's going to keep consolidating and finally trade lower. After it trades lower, it's going to make a new leg of price. So when this makes a new leg of price now, what you're going to do now is to take this your price range to and mark the high and the low, so that way you can be able to know which one is your external and internal range liquidity. These places are your external. Anything happening here is your internal. So when price break this place, you are having a higher high and you keep on going, you keep on having higher highs, higher lows, higher highs, higher lows. Now at this point now you can see that price actually created a higher high, so you're not expecting a retracement, but unfortunately price break this structure. As price is break this structure, this becomes a liquidity sweep, and then before you can actually confirm that price is about to go bearish and that this is a market structure shift, you want to look for a couple of criteria which I will give you right now. And one of the criteria is what you want to see that price actually break the structure, because this will serve as your liquidity sweep. So if price have a liquidity sweep and have a displacement breaking the previous higher low, now you want to look for divergence to see if there's some form of divergence between this high with the correlated pair. This is what is going to make it high probability that this is a structure shift. If not, it might be price taking out this liquidity to continue higher, and you want to wait to see the real intention. Ideally, you don't want to trade this first stage, right? You want to see price forms other high, failing to break this one and break the second one. So you keep on drawing your range from this place. As price created this bearish range, you draw it from the high and draw it from the low. And whatever price is doing here, just know here is your external range liquidity. If price breaks it, if you just break it, then you can now map out your range. You can now apply that break structure, and you can now map out your range. This your range like this, and this is now serving as your bullish range, and you can now expect a retracement to continue. I know this is confusing at this point, but as we go through a couple of life examples, you're going to get familiar with it. Now let's go to the live chat. Let me cut you guys here for a few minutes. So this is an update on the challenge we started with the team. If you guys are not aware, we actually started a challenge. The initial goal of the challenge was to accumulate $1 million in profit capital. After some time, I decided to break it down to make it modularly, so it can be something that is a 3 months goal. So the goal was to start with the smallest profit, which is 5k, and scale up to 100k in profit capital. So the reason why I started this challenge is to help my students build capital. And we actually started this challenge, I think around late August, right? So this is an update I posted on the challenge. So the first 5K has been passed. The second one is up 3%. And we try to make withdrawal from the first one and use it to buy the next bigger profit, which is 25K. And that's how we scale up. And this is actually a proof of it. I bought the account, my student bought it, and you can see that we actually passed it. It's an 8% profit target. This is phase two. The phase one, I've posted it if you scroll up. So this is the second account we are trading, which is up 3%. Right, so that this update was on 13th of October, and the recent one we posted was on 10th of November, which is today. And the mission continues. The second 5K account has been passed. The next 25K account is phase one is currently up 2.7%, and the goal we are looking to do is to pass the 25K and make just 3% and withdraw this amount. This is maths here. And we're going to use the profit to buy a 10K at the 100K account and make which will cost $500, then use it to pass it. And at the end of this, so the goal of this next 3 months is to make 200K in profit funding, right? So if you guys are interested in it, and this is actually the proof of it, you can go through it. You can see this is actually the proof of the next 25K we have, but this one is up 20. This is up only 2.7%. And if you are to scroll down, this is actually a trade that I took on it as I'm about to pass a trade that is currently running that is about to pass to be passed, right? So if you guys are interested, you can reach me out on this Telegram channel. Just click the link to join the free group, and you can even scroll through it to see the proof or see the setup we are posting, and just send a DM to the admin. I'm going to talk to you personally. I see if you're a good fit, and if you're a good fit, I'll add you up. It will cost you money. But if you don't have the money to take the challenge, you can actually start doing the challenge on your own. All you need to do is to subscribe to the all you need to do is to subscribe to this channel, to this free group, and take it. So not all setup I post are going to be that are posted for free. So when you see one, you capitalize on it, get a reliable platform, and set a 1% risk per trade. And if you and build a trading manager. So this is the you can go through this pin post and try to do the challenge on your own. It's key you challenge yourself. You want to go and challenge yourself. If you don't challenge yourself, you're not going to make money trading. That's the best way you can make money, by challenging yourself. But if you guys want to join my group, you can actually send me a DM. I think that's the best if you have the money. But if you don't have money, just try to do it on your own. So that's it for this. I just want to let you guys know this is what our mentorship is offering. Okay, now let's just start from here now. At this point, you get this your fib tool, and you can see this high, you can see this low. You're going to mark it out, or until this was a sweep, it wasn't a break until it finally breaks it. So once it finally breaks it at this point now, what do you have? You have finally break it now. You're waiting for price to form a peak. Right, you want price to form a bottom, like show you that this is it have actually formed a bottom. Now it has formed a bottom at this zone. You can now draw this your two from this place down to this place, and you might be saying, wow, this is very huge. Yeah, it's huge, but at small time it's going to correct back. So anything that price is doing around here is not of concern to us. What we are concerned is we are waiting until price break either of this side, either the downside to the upside, and in this case it broke to the downside. So what are we going to do? We are going to take this range and mark it out from the high it created. Honestly, it would have been from the high it break it at this point. So we're going to mark it from the high it created to the low when it forms the low. So we see price doing a lot of things consolidating until finally we keep waiting until finally it it breaks out of this place. So now it has break out. So this is how we are reading our structure. So after it breaks out, we want to map it out from the high it created to the low that it's created. And price keeps on doing all what it's doing till it finally break out of this structure. Okay, this is the low it created. So it finally break out of this structure. Now when you break out of this structure, we now form the next high and the next low, and the whole thing just keep on going. Now let me give you guys another example so you guys can so it can solidify your understanding of it. Alright, so this one example is on card JPY. I would have liked to use the 1 hour time frame, the daily time frame. Let's use the daily time frame. I think this structure is huge. Now let's use the daily time frame. What do we have here? Let's start from this place. We have price forming. Okay, let's just start from this place. We have price. This is the range now. At this point, this is the range we are working with. This is the range we are working with. So we are waiting for price to break either side of this range. So we keep on extending it until it finally break one side, and the side it broke was up. So after you break this side, you're going to mark it from the low to the high, and we are waiting for it to break either of this one side, either this high or this low. So we are going to extend it to this place. We're going to extend it to this place until it finally breaks it. So at this point, it now breaks it. So what are we going to do? We're going to take our range tool and draw it from this place to this place. And we keep waiting until it finally breaks it. So we're going to expand it. Yeah, and then we're going to wait for it to break it. After it breaks it at this place, we're going to draw it again from this row to this side. You see how we are reading our structure. And it keeps on going, but I'm waiting for it to break structure to the downside. Let me show you guys how to anticipate it. So after it finally create this high, we're going to extend it until it break this high, and in this point it break it. You need to be systematic. You broke it at this point, right? So we now continue like this. We're going to draw the high to this low. So after everything, it keeps on trading until you finally break it at this point. And once it break it at this point, we're going to draw it from the low to the high at this place. So now I keep on waiting for it to break it. And notice something, it did break it at this point, but here is when it actually broke it to the downside. Now at this point, we can see that we have a liquidity sweep. We have a liquidity sweep. Remember that criteria that I gave you. We have a break of structure, which is an actual market structure shift, and we want to see if this is valid. You can check for divergence. I don't have time to check it, but just look for this GPV card, maybe Euro card. You can look for if there's crack and correlation. If there's crack, it makes it high probability, showing that price want to go to start trading lower for the meantime. And you want to look at the back to see if there's any key level we actually tapped into. I don't think there's a clear key level we tapped into. If you go to the, you're using the daily time frame, you go to the weekly time frame, you check if there's a key level. Then if there was a key level and all these criteria are stacked, you can expect this to be a market structure shift, and price want to start trading lower. It want to start trading lower like this. So you want to be prepared for it. Right? But in this case, some criteria is not suit. But let's just say that we mistakenly took this one as a structure shift. So after price did this thing, we're going to mark the high and the low. Now it have break structure now, and we are now bearish. We're going to mark the high to the low. Now we are expecting, what are we expecting? We're expecting price to break to the downside or to the upside. Honestly, we are expecting price to break to the downside because of we are now bearish, but you want to be open. You want to be open, either bearish or bullish. Anyone that offers you, you will continue with that direction. So now what the price did at this point, we keep on drawing it, and it finally broke to the upside. As it broke to the upside, that has told us that price is still continuing our bearish move, and this was actually a liquidity sweep to trade to this key level. You know, sometimes when price have been trending for a while, it will sometimes want to trade lower to take out some liquidity. So you can see that this was actually a liquidity sweep, and it broke structure up to the upside. Now what are you going to do? You're going to start going bullish. You're going to map out your high to the low, and you are expecting price to break either of these place. And what the price did in this case now, you can see that price swept here, it didn't break it. Anytime you see something like this, price swept here and trade to these places, you can see that it's even more high probability because it took out liquidity to continue to fuel the price to the upside. So at this point, you keep on drafting it, right? So it finally breaks structure. Now you have this range. Remember, this was your previous range, right? It swept liquidity right here. It swept liquidity right here. This was the low it's created, the main low it's created. This is why I told you always use this price range, because now you can see the main low it's created. This is the main low it's created, right? So now this from this way, you see, and there's a second low that is at this place. So you might be confusing this low, but this is not it. This is a low that is created. You can see it expand and creates. This is the retracement, the bottom of the retracement this price leg made. So what are you going to do? You're going to draw your distance from this low till it forms a peak. At this point is when it forms a peak and start retracing. So what are you waiting for? You are waiting for price to until price break this place. Even at this point, it have not yet break it. Now, if you are not marking using this thing to mark it out well, you're marking the low on the high, you might easily confuse this thing, this whole price action, this small price action. Let me map it out. This small price action as break of structure continue. This is actually might easily confuse this thing as the new market structure. But this is the lower time frame market structure. This is not the actual market structure. All this thing happening here have not break out of this range. So this is why you want to use this range too. Now let's continue. So we keep on waiting until one side gets broken. So finally at this point, I think at this point, one side have gotten broken. Right. So now we now have this wide price range. So in this case, you now have a very wide price range, and what happened is this thing now makes you looking at the higher time frame. It now gives you a higher time frame. But honestly, if I was in this trade, if I was in this price action, what I'm going to do is I'm going to refine my this thing and start using a lower structure. Find for a new structure because this one has become wide. It's huge. Imagine you're looking to take an entry at this place. You're waiting days for price to trade to this place, and you are now trading a higher time frame because at this point you are, let's say, an intra-week trader. But now, since the range have expanded, it's now making you feel like if you are more of a long-term trader. So what I usually do is to start the range again, start from scratch to map out the range. Right. So what I will do is I'll wait for one liquidity sweep. I'll wait to get a valid range, a smaller range, a more refined range, a valid range. And what is this valid range? One, I want to see a liquidity sweep. Right. Let's make this a bit thick. One, I want to see a liquidity sweep. Two, I want to see price tapping into a key level, some form of key level. You can see it actually swept all this liquidity right in this place and tapped into this key level. And two, break of structure. Let's get rid of this one. Where this break structure? It broke this structure at this point. You see that breaks this structure. Now this will now be my new range. You can also look for divergence here. So this will now be my new range. I will now start again and start using this refined range from this high to this low. So what am I going to expect? I'm going to expect a retracement. After this retracement, I expect price to do its thing and finally, hopefully, break this structure and then continue, break this structure and then continue, break this structure and then the story continues like that. So I'm now using this lower range, refined range. So as price trade this, after price trade this and break to this place, I'll keep on waiting. I'll keep on drawing this and until price finally break it at this point. So when price breaks at this point, I'm going to take my price range, draw it from this bottom, assuming this was the bottom price created, to the high, and then I'll keep on waiting until price breaks this structure. As price break this structure, then I'm going to take my range again, draw it, look at the bottom price made before it broke the structure. That's where I'll draw it from their bottom to that high. So I'll now keep on doing this thing. And okay, now at this point I'll wait for price to form a peak. I'll sit on the sideline till price form a peak and notice that price have formed a peak and start retracing. Then I'm going to now mark out my range. And what am I expecting? I'm expecting a retracement and price break to continue. But let's say, what if price did something like this and break structure and continue to the downside? What will I do now? So now this is my previous range. I was expecting price to do this thing, to continue to the highs, to the upside, to break the high. But in this case, it break the low. What am I going to do? I'm going to now look at the side, and you can see that one, we have a liquidity sweep. This is now serving as a liquidity sweep. That's one. So I'll look at the left hand side to see if there's a key level, higher time frame key level we tapped into that might be the catalyst to this reversal, right? And thirdly, I'll now look for some kind of divergence. Now, if I don't see, if at least, and then when I say divergence, I'll make sure that this previous lower high was broke, higher high was broken, was actually broken. In this case, was broken. Then, if this criteria meet, I will now start expecting some short-term bearish move. I will expect price to form a bottom, and when price forms a bottom, I'll now draw my range. This range from, okay, let's get a new range from this high down to the low, and I'm expecting price to break this high, to trade high, to break this low. But if price come back and break this high, I'll still be flexible. So I'm open to anything the price gives me, the market even. If it comes back and break this high, I'll just continue and draw it from this low it from up to this high. And that's how I'll continue. I'll continue following the market. So now, in this case, remember that before we call this a structure shift, a market structure shift, a valid one, we must look for those criteria I showed you. We have a liquidity sweep, and then we have price tapping into a higher time frame key level, and an actual break of structure, which is the break of the previous higher high. What if we didn't get these criteria and divergence? What if we didn't get these criteria? Honestly, if like two criteria is missing, I'm going to wait to see what price we do. But how will I wait to see what price we do? Now let's take an example. After this break of structure, before I'll mark this, I'll wait for price to do something like this to form the next leg. So form the next leg and break the next structure. So at this point, I'll see that price have break the first structure, come and break the next structure. Then I'll now mark it, and now price might be looking for some sell side liquidity. Now, how do you trade this model now? How do you trade it using supply and demand? It's an actual entry model you are looking for. So what are you looking for in this case? To trade it, when you mark out your range from high to low. Okay, let's use this range now. When you mark out your high from this your range from high to this way, remember this way we mark it from high, from this high to the from this low to this high. Now, what are you expecting? You're looking to you want to make sure there's a liquidity sweep tapping into a key level. Now there's some form of liquidity that price is going to take out. Then you can take your entry at this other block that was formed, which is the last candle before the break of structure. You can take your entry right there. Just make sure there's liquidity sweep. There's valid order block. What is a valid zone or order block? A valid zone in my own context is a zone or an order block that swept liquidity, tap into a time frame key level. If you want to go sinister, you can look for some form of divergence. So that's the key. In this place now, we have this range from this. Where is this range now? This range was from this high to this low, from this low to this high. By this, the structure it broke. Let's try to mark it again. Okay, let's try to mark it from this low to, okay, this one, right? From this low to this high. In this case, I'll look back to see if there's a form of liquidity. No liquidity sweep, and there's no even liquidity that price is going to take out for it to tap here. So this trade, I would have take this order block, but this order block is not, and there's no liquidity that is going to take out before you trade to this order block. Now, next one, if you have this price range, so you just keep looking for valid order block and trading from it. And if many of the criteria of the valid order block do not check, you can look for lower time frame confirmation. So this is how to lead. This is how to read market structure. You see how I made it sense systematic and easy. Some people tell you have to find this, trying to make it look like smart money and all these things. No, you don't really need all these things. You want to make it systematic. As long as you keep on doing the same thing over and over again, you're going to have a statistical edge, right? You don't want to start trying to make things unnecessarily complicated. So this is how to read it. Just keep going to your chart and keep practicing. If the range become wide, because that's something that I've faced, like in this case now, you can see that the range actually become wide. If you have to actually mark the range from this high now to this low, you can see that the range became high. So what you're going to do, you're going to refine this range and start wait for price to give you a more usable range, like a more smaller range, because this range is now on a higher, more higher time frame. So you look for price to give you a lower range, a smaller range to start working with, to start again working with. And for you to get a new range to start again working with, you want to see a liquidity sweep into a key level break of structure and continue with it. Hope you guys understand this whole thing. Now, if you guys want to work with me, I actually have we're actually running a group mentorship, and I don't just teach you guys concept. I give you guys a strategy that you can start trading with, right? Okay, so I also want to let you guys know that I actually started this challenge with my private group, and the goal of the challenge is to accumulate $1 million in perfect capital. But for this year, we are looking to accumulate 100K. That's the for this year. But the whole goal was to accumulate $1 million in perfect capital, and we started this challenge on August. And as you can see, this is the update on the challenge. This one update was posted on September, right? And you can see I told you guys that we have passed the first. We started with the smallest profile possible, so everybody can follow along. We started with 5K profile, and we're going to use the 5K to keep on making withdrawals and scaling up. So we started with the first 5K, and the first 5K, as you can see, we passed the first 5K, and this was and the account we are flipping. You know what we do in this our private group? We run multiple challenge. Last before that, I was running a challenge where we try to flip $100 to 10K, and we traded that in all the way to 1,000 something dollars before the whole thing started consolidating. So this was the previous challenge we have. But as you can see, we the first 5K profit account was really up. Was the first 5K in this case was up 5%. This is the first 5K, and the second one was up only 2%. So that's it. So that's it. This one update I posted. Now a more recent update I put it on October 13th. You can see that we the first 5K have been passed, as you can see here, and the second one is up 3%. This update was posted on October 13th. Recently now, as of now, the we have passed the two profile. We use the money from the two profile, the withdrawals from there, and use it and scale up to 25K profile. But as you can see, this was the first trade we took on the 25K profile, and you can see this is actually this it resulted in a loss too. So we are down 1% on the 25K profile. And as you can see, this is a unique strategy I'm using. This is a unique strategy. Look at the strategy. This 10 hour trade. This strategy offers 10 hour. Let me show you guys it. Let's see if you can see it. As you can see, 10 out, always 10 out. So this hits 10 out. This is consistent. Go to this is actually our free Telegram channel. I'm actually posting trade here. You can see when I posted it. If you have to go to this one, you can see when we posted it. Alright, let's go to this one. You can see that we actually call this live. We actually caught this live like this when we posted it, and it hits complete 10 hour. Always 10 hour. If you even go to my this thing, you can see that it's actually 10 hour setup that we always post. But okay, let's just turn on the trades that we have been calling few weeks ago, right? So now this is on XPS 500. As you can see, this is actually a unique setup. As you can see, this one was 10 hour, right? A 10 hour setup, 10 hour, 10 hour, 10 hour. This one was almost 10 hour. This one 10 hour. This one is also we're also waiting for another 10 hour setup on this place. So this is a unique strategy I'm actually trading. This is a strategy I don't used to talk about, and this is what I'm using. So I'm going to teach you guys also the strategy. It's a very nice strategy, and you're going to partake on the challenge we are taking. So one thing I've learned is that the best way to actually mentor students is not to just give them a couple of things, is to do challenges with them. That's why I'm consistently running different challenges on my platform, so that way you can make money while you learn. So if that sounds like something you're interested, hit me on a DM and send me a DM on my I'm very active on Telegram channel, but you can send me on any social media. But I'm very active on Telegram channel, and I'm going to reach out to you. I'm going to interview you myself and see if you're a good fit. If you're a good fit, then I'm going to let you in, right? So it's actually paid. But so and also do well to check out this our free Telegram channel. We are always posting free setups there. So if you're interested. So that's it for this video. I hope you guys like it. If you like it, drop me a like there and also comment your thoughts, your question, And the next video you want me to do, that's it for this video. I hope to see you guys in my next video.